The Indian stock market is crashing, but smart investors are making money. Here's how you can too. We've all seen the headlines. Inflation is soaring, interest rates are climbing, and the stock market is a roller coaster of uncertainty. It feels like the entire market is turning red. But here's the thing. While some investors panic, others see this as an opportunity. In this video, I'm going to break down 5 powerful techniques that savvy investors use to make money when the market drops. Whether you're a seasoned investor or just starting out, these strategies are your secret weapons to navigate a volatile market and come out on top. Stay tuned because we're diving deep into each strategy, showing you exactly how they work, and most importantly, how you can implement them to potentially profit from a market downturn. Now, the first strategy might seem a little counterintuitive, especially if you're used to traditional investing. But stick with me. It's called short selling, and it essentially lets you profit from a decline in a stock's price. Imagine this. You believe a certain stock, let's call it company XYZ, is overvalued and due for a correction. With short selling, you can borrow shares of company XYZ from a brokerage and immediately sell those borrowed shares at the current market price. Then, when the stock price drops as you predicted, you buy back those shares at a lower price and return them to the brokerage, pocketing the difference as your profit. That's the beauty of short selling. It allows you to potentially make money even when the market is heading south. Up next, we'll explore another strategy that can help you weather the storm and potentially come out ahead, investing in defensive stocks. When the market takes a nosedive, it's natural to feel a bit uneasy about your investments. But instead of panicking, savvy investors turn to defensive stocks. These are companies that tend to hold their value well, even during economic downturns. Think of sectors like consumer staples, the things people always need, regardless of the economy, like food, beverages, and household goods. Companies like Hindustan Unilever or Nestle India, with their wide range of essential products, often see consistent demand even when people cut back on discretionary spending. Healthcare is another sector that tends to be relatively resilient. People still need medications and medical services, even in a recession. By diversifying your portfolio with companies that have a proven track record of weathering economic storms, you can potentially mitigate your losses and position yourself for a stronger rebound when the market eventually recovers. Speaking of defensive strategies, let's move on to our next powerful tool, put options. Now, let's talk about a more advanced but incredibly powerful strategy, buying put options. Think of put options as an insurance policy for your portfolio. They give you the right, but not the obligation, to sell a specific stock at a predetermined price, known as the strike price, within a certain time frame. Here's how it works. Let's say you own shares of a company, and you're concerned about a potential drop in its stock price. You can buy put options on that stock, which will give you the right to sell your shares at the strike price, even if the market price falls below it. This limits your potential losses because you've locked in a selling price. Buying put options can be a great way to hedge your bets and protect your portfolio from significant losses during a market downturn. Now, let's move on to a strategy that's all about turning market volatility into an advantage: dollar cost averaging. This disciplined approach helps you stay invested consistently, avoid trying to time the market, which is notoriously difficult, and potentially benefit from market fluctuations. Market downturns can be intimidating, especially if you're thinking of investing more money, but that's where dollar cost averaging comes in. It's a simple yet incredibly effective strategy that takes the emotion out of investing and can actually help you benefit from market volatility. Here's the basic idea. Instead of investing a lump sum all at once, you divide your investment amount into smaller portions and invest them at regular intervals, regardless of the market's ups and downs. Let's say you want to invest 10,000 rupees in a particular stock. Instead of investing it all at once, you decide to invest 2,000 rupees every month for 5 months. Over time, this strategy averages out your purchase price, potentially lowering your overall cost basis and enhancing your returns. This disciplined approach helps you stay invested consistently, avoid trying to time the market, which is notoriously difficult, and potentially benefit from market fluctuations. Now for our final strategy, let's explore how to safeguard your wealth with traditional safe haven assets. When the stock market is in turmoil, investors often turn to safe haven assets, seeking stability and protection for their wealth. One of the most well-known safe haven assets is gold. For centuries, gold has been considered a reliable store of value. During market downturns, investors often flock to gold as a hedge against inflation and economic instability, driving up its price. You can invest in gold in various ways, including physical gold like coins or bars, gold ETFs that track the price of gold, or even stocks of gold mining companies. Another safe haven option is government bonds, particularly those issued by stable economies like the United States or India. By diversifying your portfolio with a portion allocated to these assets, you can potentially mitigate your overall risk and protect a portion of your wealth during turbulent market conditions. So there you have it, 5 proven strategies that can help you not just survive, but potentially thrive in a falling Indian stock market. Remember, while market downturns are a natural part of the economic cycle, they also present unique opportunities for those who are prepared. Start implementing these strategies today. Whether it's exploring short selling, fortifying your portfolio with defensive stocks and put options, taking advantage of dollar cost averaging, or exploring the stability of safe haven assets, the key is to take action and position yourself for success. Don't let fear and uncertainty hold you back. Like this video if you found it helpful, share it with your friends who want to navigate the market with confidence, and subscribe to the channel for more videos on how to grow your wealth and achieve financial freedom.